Well, that was a relief. US markets rebound from their worst session in a month as Nvidia shares jumped 4.4% on Tuesday, rising $160 billion in market value, while Australia's share market opened higher on Wednesday. Welcome to the Daily. My name is Jessica Amir. I'm a market strategist with Moomoo. Well, stocks have been able to climb higher because we've got oil dropping about 5%. The US dollar is lower and bond yields are lower too, with geopolitical tension easing. Well, we also heard from a US central banker overnight saying the Fed should keep cutting interest rates to bring inflation back down to its 2% target. So that's it. We can all go home now. But the reality is we've got markets set up to go back to basics. The stock market is now being driven, as it should be, by earnings growth. And investors are focused on just that. US company earnings season gets underway this week, and we'll find out how much corporate earnings grew by last quarter and what the biggest 500 companies in the US see ahead. US earnings expectations have been downgraded from 15% to 9.8% earnings growth. So there's a lower bar to jump over, right? Meaning if earnings grow more than the 9.8% expected, markets could take off. That's provided inflation doesn't deliver nasty surprises this week. So what to watch today? We'll focus on stocks benefiting from the two long-term trends: US rate cuts and China stimulus. We're seeing Block, the payment platform, their shares are up the most today, while Life360 lifted almost 5% at the open today, hitting a brand new record high of $19.98. So what is Life360? Well, it's the family tracking app endorsed by Michael Phelps and the family of the late Kobe Bryant. It makes most of their money from the US, and they're expected to see earnings growth of 23% this year, with US rate cuts to support their earnings growth ahead. Now, Life360, the stock was upgraded by Bell Potter earlier today. Life360 is already one of this year's top performing stocks. It's up 170% this year, would you believe? But Bell Potter said that they see more upside. They reiterated the stock as a buy, $22.50 price target. Meanwhile, stocks that could benefit from China stimulus and Australian business conditions improving, and wait for it, from New Zealand cutting interest rates. Well, stocks benefiting from that trifecta, they're rising. Stocks like car sales, realestate.com, JB Hi-Fi and Aristocrat are all higher. While we're seeing some stocks hit new highs today, Netwealth, Hub24, Medicus hitting 52-week highs, along with industrial stocks like Brambles and the glove maker and condom maker Ansell. Lastly, remember that global institutions have been pouring most of their money into China-facing stocks than US stocks, meaning they're buying more of China's index ETFs, like the CSI 300, more so than the NDQ. So that's something to consider. And that's the Daily.